great day for the bulls on Wall Street. The S&P and Nasdaq posting record closes and the Dow jumping more than 480 points. With stocks touching fresh record highs, our next guest says don't chase the rally. He's Chris Harvey, head of equity strategy at Wells Fargo Securities. Why do you say such a crazy thing?
I don't know. Stocks going up 100% in a month. There might be a little bit of froth. China throwing a ton of money at the situation, the Fed throwing a ton of money at the situation. What we've been saying is you should have put cyclicality on. You should have put risk on. Now what you want to do is you want to start harvesting it. You want to save that risk for a rainy day. But at some point, we're going to have a repricing of risk. So take these opportunities to start repositioning the portfolio. And just there's a lot of things, opportunities we see out there, but more so on the lower risk side of the equation.
What are those opportunities?
So we didn't like the bond proxies for a long time. We're starting to pick up some of the bond proxies. Late last year, we downgraded the semis. We're not going back to the semis, but at the same time, we said take some profit on banks.
When you say bond proxies, you're talking about REITs, you're talking about utilities, what?
Exactly.
Both.
We're talking about REITs, we're talking about utilities, we're talking about low vol and low vol products. Anything that has a yield, anything that works or has interest rate sensitivity. So as rates go down, they work. The other thing that we're doing is we're looking at banks. We started to pound the table on banks in September. Back in December, we said, you know, it might be time to lighten up a little bit. I think it's time to get back in there. And so we're slowly starting to add a little bit more risk, or actually what we're trying to do is we're trying to add some contrarian opportunities.
How about the stuff that's been awful, like energy?
I got that question today, and energy is a tough one for us because we do see a lot of value. We're just not sure how you extract it at this point in time. So for us, what we're doing is we're looking for that best risk reward. So we did upgrade banks back in the fall, but we couldn't get behind energy, and we're still looking at it, but we just can't get there.
You talk about harvesting. You told me what you're looking at adding.
Right.
Some of the defense. What would you harvest here?
So we've been harvesting a lot of the higher risk stuff, and that's been in the semi space. That's been in the technology space. And really, that's where we want to take some money off the table because it's performed so well. If you look at the semi space, if you look at the software space, really big numbers last year. This year, they can continue to go further, but we think you want to be a little bit more conservative. You want to be patient because at some point we are going to have a 5 to 10% pullback.
What could trip it? What could trip the market? I mean, coronavirus did for a few days.
So I think the biggest fear and I think the biggest misunderstanding is everyone thinks, oh, the Fed's being really accommodative. They're buying $60 billion of T-bills every month. That's true. But what's happening is repos are rolling off at the same time. So believe it or not, the Fed's balance sheet didn't grow in January. It actually contracted. And so when people realize that the heavy lifting by the Fed is done, I think we're going to see a repricing of risk.
You know, you mentioned that China has obviously thrown a lot of money to kind of stem the tide in their stock market, but that doesn't really mean a whole heck of a lot about their economy. Do you think that what we're seeing here is just a bunch of window dressing? We know that the Fed has obviously been accommodative. We know that we had those rate cuts. Now you have China. You have the rest of the world is in on this game. But at some point, no matter, let's just say, we stop getting the sort of increases in the deaths and the cases of corona, but economic activity has just slowed, and maybe it doesn't come back at the pace. Do you think there's a chance that the stock market right now is kind of, you know, shading over what could be a slower economic growth?
I don't know if it's shading over. What the stock market is saying is if you're going to throw that kind of liquidity at it, if you're going to tell me you're going to provide that kind of backstop, I'm going to have to go out on the risk curve and down the capital structure in the short term. But I think you're right. Longer term, what's going to happen is if you were a raging bull, if you were Jake LaMotta, what you were saying is, hey, China's going to be really strong. China's going to spill over to Europe. Europe's going to spill over into the U.S. And that's all going to happen as soon as we turn the calendar. Phase one's going to be great. But wait a minute. Phase one, we're starting to hear pushback on phase one. And oh, by the way, China, I don't know exactly what's happening with coronavirus, but what we do know is the prevention, it's slowing down economic activity. It's starting to seep into people's thoughts. And what I believe is you're going to have a delay of any sort of economic activity. And so as a consequence, you have to take a little bit off the top. And so your growth or your upside is not going to be all that great.
Chris Harvey, thanks very much. We appreciate you being here. Now we're going to talk about him. Okay?
Smart
talk
man.
about Chris. How do we trade?
Well, he's gone, so I'm not going to bring him back. But I think people are underestimating. If the Fed's balance sheet has stopped growing, and if it starts to contract in April, May, when I think is when they said they're going to sort of stop this lunacy, I don't think the market's at all looking at that, or they should be looking at it. And a 15 VIX environment, I think they're pricing risk the wrong way right now.
The market wants a reason to sell off. in the market, it's going to get a reason to sell off. And eventually we're going to hit that 3K mark because that's where people want to get back in the market.
All right.